These are the headlines. Cryptocurrencies: the U.S. Chamber of Commerce supports Coinbase in its dispute with the SEC. Crypto exchanges: Changpeng Zhao would seek to reduce its stake in Binance US. For 30 minutes, the Ethereum blockchain stopped finalizing blocks. Cryptocurrencies: the U.S. Chamber of Commerce supports Coinbase in its dispute with the SEC. While Coinbase recently took legal action to require the SEC to clarify its regulatory position, the U.S. Chamber of Commerce has given its support to the cryptocurrency platform. It is the largest federation of companies in the world. U.S. Chamber of Commerce partners with Coinbase against SEC while Coinbase sued the Securities and Exchange Commission, SEC, at the end of April. The U.S. Chamber of Commerce has given its support to the cryptocurrency platform by coming forward as amicus curiae in this case. An amicus curiae is a person or entity not directly related to a trial, but coming to testify to advance the case. This is an important turning point, as the U.S. Chamber of Commerce is the world's largest nonprofit organization in this sector. Indeed, it claims 300,000 direct or indirect members. Thus, in a 27-page document filed on May 9 with the U.S. Court of Appeals, she deplored a lengthy argument against the SEC. In particular, we find quite explicit statements, echoing the many reproaches that have already been made to the American financial policemen, and one of the extracts of which makes it possible to take the full measure. This regulatory chaos is intentional, not accidental. The SEC has deliberately muddied the waters by claiming absolute authority over digital assets, deploying a messy, enforcement-based approach. The Commission's attempt to veto Coinbase's petition is just the latest example of its broader obfuscation strategy. SEC measures are increasingly criticized. The amicus curiae of the Chamber of Commerce directly concerns the petition that Coinbase had filed in July 2022, asking the SEC to clarify its position, including on cryptocurrencies that fall under financial securities or not. According to our colleagues at CoinDesk, a U.S. court would have given a period of 10 days to the SEC, from May 3, for it to provide these clarifications. Note that if the financial policeman and its president Gary Gensler are often talked about vis-à-vis the measures taken against the ecosystem of cryptocurrencies, these actions seem to begin to disturb across the Atlantic as we see more and more. Recall that just this week, Bittrex US declared bankruptcy due to this regulatory vagueness, and that for these same reasons, Jane Street and Jump Crypto chose to stop their cryptocurrency trading operations in the United States. Crypto exchanges: Changpeng Zhao would seek to reduce its stake in Binance US. Binance US, the U.S. arm of cryptocurrency exchange Binance, is looking to reduce its founder, Changpeng Zhao's stake in the company in order to improve its relationship with local regulators. This decision comes after U.S. authorities have stepped up their oversight of Binance and other players in the crypto asset market. Binance US wants to move away from its founder. Binance US, the U.S. arm of Binance, is reportedly studying a way to reduce Changpeng Zhao's stake in the company in order to establish better relations with local regulators, who have been particularly active in monitoring the cryptocurrency giant. It is the media The Information that reports this information, citing two people close to the case who wish to maintain their anonymity. Thus, it turns out that Changpeng Zhao would seek to reduce his stake in the U.S. exchange since last summer, a little less than a year ago. It should be noted that CZ is the majority shareholder of Binance US. The management of the American exchange hopes to restore its image by putting a little distance with its founder, a target favored by international regulators given the aura of Binance, which sees circulating almost $10 billion per day on its platform. In late March, the CFTC attacked Binance and its CEO head-on, accusing the platform of allowing U.S. citizens to use its platform illegally or allowing its employees to trade on its platform, which led to public explanations from Changpeng Zhao. It would therefore seem logical that Binance US wants to detach itself from this kind of business, the branch having been specially created to comply with U.S. jurisdiction. Although a prime target, Binance is far from being the only platform targeted by regulators. We can cite Kraken, which was forced to pay a $30 million fine to the Securities and Exchange Commission because of its staking offer, or more recently Bittrex, which voluntarily went bankrupt because of regulatory uncertainty in the U.S. For 30 minutes, the Ethereum blockchain stopped finalizing blocks. Late Thursday evening, the Ethereum blockchain encountered a problem temporarily preventing blocks from being validated correctly. If everything has returned to normal since then, here's what we know about this episode for now. Blocks have temporarily stopped being finalized on Ethereum at the time of recording. The precise cause had not yet been communicated, but for about 30 minutes the Ethereum blockchain encountered a problem preventing the blocks from being finalized. It is important to clarify that the blockchain has not stopped. Only, for 3 epochs, the consensus layer suffered a bug similar to what is called an inactivity leak. In simpler terms, blockchain behaved as if many validators were offline. This was not the case, but the fact is that during this period, a limited number of attestations were issued by validators. Check this epochs who encountered a consensus bug on Ethereum. A problem with the software used? To function, the Ethereum blockchain is divided into 2 pillars, the execution layer, which allows transactions to take place, and the consensus layer, which will ensure the compliance of blocks. For these 2 pillars, validators can use different software called clients. The Ethereum Foundation encourages validators to diversify the clients used, so that if a bug occurs, the blockchain continues to function normally. In this illustration, we can see that the software used for the consensus layer is properly diversified, while for the runtime layer, the Geth client is far too represented. Check this diversities of clients used by validators on Ethereum. Since no consensus layer client is used by more than 50% of validators, tonight's bug could not have caused the blockchain to stop or fork it. If the problem comes from one of the software used. In this eventuality, the core developer Superfish specifies that this problem of inactivity leakage could even have been avoided if no software represented more than 33% of validators. For his part, Terence Zhao indicated that a problem has been identified on the Prism client, although we cannot say at this time if this is the source of the block validation stoppage. The most important thing in the immediate future is that everything quickly returned to normal, and that no validator was slashed during this episode. Indeed, slashing intervenes to puncture a part of the stake ETH when the validators do not perform the work correctly. A detailed report of what happened should be provided shortly by the development team, and we can then come back to this information at that time. These were the most important crypto news. Make sure to subscribe to our channel to be informed in time about the developments within the crypto industry and much more. We are considering making our channel accessible only for premium users, but if you subscribe to our channel now you will forever stay a free member. Okay, stay tuned and see you tomorrow.